Hey guys, Elliott here. Welcome to week 4, module 4. Now this week we're going to be talking about SWOT analysis, strengths, weaknesses, opportunities, and threats, and how those apply to the companies you're studying right now. Alright, let me share my screen. Okay, so strengths, weaknesses, opportunities, and threats. Now, there are a lot of questions that looking at a SWOT analysis will force you to think through. So the first here is market share. And these are just a lot of common questions that you would want to be thinking about. But first, let me take a step back and explain why is it important to understand a SWOT analysis for valuation. So here's why. When you're valuing a company, you need to know how competitive it is. You need to know what the industry and the environment is like. You need to know what competitors are like. You need to know what prices are like. You need to know what the labor pool is like. Are you going to be struggling to find workers? Do you need skilled workers to do the roles and the jobs that you're filling on a day-to-day basis for this company? If those things are hard, if labor prices are going up, or if there's a shortage in the labor pool, then you've got to factor that in because that's probably going to lead to an increase in wages, the cost of wages over time. So these are all things that you think about whenever you're making your projections. Because when we do the income approach, as we'll see in the future, do the income approach, you make the projections, project the future cash flows, and you discount those to present value to come up with your valuation calculation. So when you're projecting, you got to factor in things like growth in expense, growth in wages, what kind of growth in revenue you're going to see. So if you look at your company through the lens of a SWOT analysis, it will help you answer questions like that. So let me go through this list real quickly here. So market share, is the industry fragmented or are there a lot of players involved? Is it an oligopoly? An oligopoly is like a small few concentration of players. You can think of it like the airlines, like JetBlue, American Airlines, Southwest. It's concentrated in a large group or a small group of large players. Monopoly, is there only one or two players? I mean, these are things, if it is, say, if you are, for example, operating in an oligopoly, well, that means that barriers to entry are very high. And if you already have a good market share, then you can probably project with confidence that your revenues and your expenses are going to be somewhat stable when you're projecting them. Technology. What sort of technology is required to operate in the industry? Is it highly tech based? Are you going to have to continue to invest into technology and beef up your IT resources over time? And if you have to continually invest in IT assets, then that's expense and that's an outflow of cash, and you got to project that in your future cash flow projections. Finance requirements. Is the industry capital intensive? Meaning, does it require a lot of cash to get into it? If it does, then most likely that's going to it's definitely going to raise the barrier to entry, and it's going to mean that other players are less likely to enter it. So that means you're going to have more stable revenue, more stable sales. Sales and marketing. What types of customer service requirements are there? So this is an interesting one. Do customers need post, or do they need engagement post-purchase, pre-purchase? So it may cost you something to get the sale, and you may have to what your customer acquisition costs are. It's going to cost you something to get that sale, but once you make the sale, is it over? Are there going to be maintenance requirements? Are you going to have consumers calling in, requesting help? Because if they are, then that's an expense that you're going to have to pay an employee to be at a call center or somewhere to answer and fill these calls and support that product. That's an expense. So those are things that you need to think about. Industry specific legislation. Is your company, are they engaging in healthcare? Are they producing food products where they've got to get, or drug products where they've got to get approval by the FDA or the USDA? And if they're doing that, then there's a cost to doing that. There's an expense. You got to file paperwork, which means you have to have employees to work those jobs to make sure that your product is compliant with these regulatory entities. Labor, supply, and demand. I briefly mentioned that. Is there highly skilled labor required? Is this a tech firm? Do you have to pay $150,000 for a computer programmer that knows some Python or AWS or some sort of advanced programming language, are you gonna have to have that employed? You got to factor that into your valuation. You got to factor that into your cash flows, which impacts your valuation. The cost of raw materials and supply and demand. What are the costs of raw materials? If you're a product manufacturer, if you're service based, this doesn't really apply, but you're thinking more for service based company, you're thinking more about wages. But raw materials, if you're a product manufacturer, then you got to look at the trend of the cost of raw materials. I mean, if you're a is the price of silicone going up? Is the price of cobalt going up? If you're a battery manufacturer or you're a chip maker, those are things you got to think about. And if those costs are going up, well, that's going to increase your cost, your cash outflows, and impact your projected cash flows and in turn your valuation. All right, let's see. Okay, so this is a module overview. I encourage you to read this. Definitely look in your text. We sort of talked about this. What are the forces of competition? What are the regulatory obstacles? Market size, market share. If you're a company that has a huge market share already, then you can project with reasonable, with good confidence that it's probably going to continue to increase, unless there's a dramatic shift in the regulatory environment or some other dramatic shift. Then you got to try to estimate or calculate how do you think that's going to decrease their market share or increase. I mean, it could be either way. Look at the labor market. We talked about that. So lastly, I'll post this. This just outlines how the text, how it maps to strengths, weaknesses, opportunities, and threats, that SWOT analysis, and it just shows you the different sections and the topics that are covered in your text. So you can sort of link those together and tie those to the topic for the week. So, and I said lastly, but here we are lastly. Okay. Recap modules 1 to 3. This is what we've done. Now this week, all you've got is a discussion board and you have homework. So, as always, let me know if you have questions. Email me, text me, call me. Either way, I'm always here to help, guys. Have a good week.